Thank you for joining me in our video today, and I thought we'd discuss about funds and the choices that you can make in terms of different share classes. So I think this is quite an important subject because it does have a huge effect on the long-term returns. If you get it wrong, it can have some big implications. So to do justice to this particular subject, I've looked at income and how that's treated. I will look at currency as well and the part that plays. And also we'll think about fees. Let's first start with income. So that's the most common feature and the differences between share classes. You have the income share class and you have the accumulation share class. And funds management firms will make a accommodation for those two different types of investors. Because with some investors, what they want is some income in retirement perhaps, or they might be individuals who have a large property exposure and they're trying to diversify that exposure with some income from other types of assets. So that can meet the need of those types of investors. But also there are those investors who might not want the income distributed to them on a twice yearly basis or a quarterly basis. And so what the fund management group will do is they'll reinvest all the income that was supposed to be paid out to that particular investor, and they will reinvest it back in the underlying securities that make up that fund. And in that way, that particular type or that particular group of investor can benefit from compound growth. Now, another type of difference you'll see is for funds which have a large international stature and presence. So some funds are lucky enough to be able to distribute their offering all over the world. But if you're an investor in the United States and you're investing in a UK fund, for simplicity's sake, you might not want to have everything recorded in sterling. You might just, for simplicity's sake, actually just want it all recorded in dollars. You don't have to think about the FX translation issues that occur. And so the fund management group will make accommodation for those types of investors. But also there's another type of investor as well. And these are the astute investors, those who are looking currently at the FX markets and the differences that exist between different currencies. And they might choose to actually make a decision based on what they might forecast as returns that can be made just from purely from the currency movements, as well as from the return of the underlying assets that sit within the fund. And so for that group, again, they might want a share class that suits them so that they can win twice, not just on the underlying investment, but also on the differences in currency movements that happen over time. So the next actual share class differences will be in terms of fees. So funds are commercial organizations and they will make discounts in terms of the fee depending on the size of the investment that that entity is prepared to make in that fund. And so you can see the differences between the big institutions and retail investors like you and me. And there are differences, and there are terms, the retail rate or the retail share class and the institutional share class. Now, we would like to think that all customers are treated fairly, but it is still the case that the more you are prepared to commit in terms of investment, the more that you can agree a commercial rate that might suit you over the long term. And this is something which can be mitigated against if you're a retail investor. So one of the things you shouldn't really do is go directly to the fund manager. It's actually better to go on a online platform who might be able to negotiate a good rate on your behalf because of the size of that particular firm. So what does this actually mean for you? So the best place for you to find all of this information will be on a fund fact sheet. So this is a place where you can see the different share classes and you can see the different properties that relate to that particular share class. And I've provided an example here. It's looking at Jupiter UK Special Situations Fund. So when you look at the differences between the share class, especially for fees, so you'll see on the fund fact sheet something called a OCR, or a ongoing charges fee, and this is the total fee for a fund, and that can make a big difference over time. So it is important that you do choose the best share class. And I talked a little bit earlier about the online platforms. So there are some online platforms that can negotiate some really good discounted rates for investors that invest on their platform. So for instance, Hargreaves Lansdown, over time they have been able to negotiate some really good rates on behalf of their investors. So it does depend on the size of the platform that you're on and the amount of negotiation that has happened over time, and that will decide whether you get the discounted rate as well. So let me just recap on what we've discussed today. We've talked about income and how that's treated. We've also focused on currency, and we've looked at fees and the part that plays. I hope you liked, I hope you understood. If you have any comments, please, I'll be very interested to hear it. Like and subscribe, and I'll speak to you all very soon.